everyone, and this is Dave Atwood, the guy rocking the Ray-Bans, and thanks so much for joining another episode of Financial Freeway. It's Friday afternoon, heading home, and yes, you may be excited about the shirt I'm wearing, but this is kind of a thing we do at the office to kind of, you know, loosen up the week a little bit, have a little fun, and yeah, break it up a little bit, do something interesting. So it's Fun Shirt Friday, and that's what you get today. The week's been a lot of things going on at work, you know, things that I can't really divulge here, but it's been a lot of ups and downs. And I gotta tell you, someone asked me today, as a bunch of stuff happened kind of in the hallway. I like to call those hallway meetings, where everyone starts to have an explosion of emotion in the hallway about some upcoming directives. And someone turned to me and said, do you like that? Don't you ever get tired of that? And I said, you know what? No. I actually enjoy it, because I feel like I'm helping. I feel like I'm doing something positive and contributing, and I really truly believe that I'm making people's lives better, more relaxed, and I don't want to get too deep into it, but safer too. And I really enjoy that. Makes me feel good about what I do. But today, what I want to talk about, really important, is investing. Now, we talked about saving, and we talked about the $5 a day retirement pension plan, which works. And I say $5 a day, but remember, don't quote me on the number. Let's focus on the fact that it's the cost of a cup of coffee at Starbucks. So people have been asking me, like, where do I put my money? Now I've got some money saved. I got this $5 coming up out of my account. What am I doing with it? And where to put it? And so I'm going to give you a real quick breakdown of investing and how I look at investing. Number one, and this is important, is investing. I know a lot of guys who do day trading, and I'm not a fan of that stuff. I don't understand it. I don't understand the way the market works, the ebbs and flows of the market enough to be able to give any sort of qualified answers on day trading. And you know, buying stock, penny stock, and then converting it, you know, when it turns into $1 million thing. I don't know any of that stuff. What I know and what I feel confident, and the way I describe it to my daughters when we're talking about investing and how to set up their investment portfolio, is there's a couple of just easy things. Now take the majority of your portfolio, make the majority of it, and we're going to say 65% of it. So for every $100 you invest, 65 of those dollars are going to be going straight to what's called an exchange traded fund, an ETF. And there's a few to choose from, but what I want to focus on is a growth ETF. So something you're going to buy and hold. And this again is my philosophy on investing. You're saving, and you want to save enough for your retirement, and this is all it's about. We will probably go down the road of some individual stocks and how to choose them, how to evaluate stocks before you buy them. But right now, I want to focus just on retirement and long-term investing. Even if you are in your 40s, late 30s, 40s, even tickling 50, I think this is really the way to go when it comes to investing. So the bulk of your investments are going to be ETFs. Now, what an ETF is it's a fund that is indexed and keeps up with the TSX 60 or the S&P 500 or the European 900. I can't remember what the actual name of that one is, but it's indexed to keep up with a fund. Now, most of these funds keep up with inflation or follow inflation. So if inflation is 2% a year, you're going to get a little bit better inflation, or a little bit better, with an exchange traded fund on the whole. Now, some years, like in 2020, March 2020, we saw a real sharp, steep decline in the market. but then there was a correction and it came back up again. So there's going to be ups and downs with that market, but over the long term, if you look at a graph of where they were daily, monthly, weekly, annually, you'll see that the graph does go up. And historically, that is what happens when you invest in the stock market. So in your RRSP, we want to throw in 65% of it into an ETF. And that's going to be a safe bet. Now, the basic mechanics of an ETF is think of a table full of little solo cups, and they're all filled with water. Some get filled with water, some water is spilled out of some get taken right off the table completely. Each one of those cups is a company or corporation or let's say something like a commodity like gold or silver. And they're designed, the whole fund is designed in a way that if one company does really well, it's going to help you take advantage of that. And if one company does really poorly, you're going to have another 500 or so different companies that are going to help kind of mitigate that risk. That's why an ETF is such a great, easy beginning way to kind of wade into the world of investments. So find yourself an ETF that works, and it's really easy. You can Google the ETFs that you're looking for in your market, or you can just, like in some of the apps, you can actually type in ETF, and it'll actually go through and show all the ETFs that are available for you to purchase. Now, that would be where I put the bulk of the money. Now, say you've got 35% left over. I'd say the next 15% of that investment fund, what I would throw that into is blue chip stock. Now, when I was young, I never really understood what a blue chip stock was. But the blue chip stock is basically a company that has been in around for more than 100 years, and it's got a good track record. It's got a good track record. It's a safe bet. Some of those companies would be in Canada. One of the great companies to work with are the 5 major banks. In the States, some of the companies that are good to work with are companies like Coca-Cola, Nabisco, Johnson & Johnson. And I'm just saying these are pretty good companies to work with. And they've been around a long time, and you're pretty safe in investing in them. But again, there are ebbs and flows with the market, with what the cost is involved with buying them, and the risk as well. So you don't want to put the bulk of your money there, but a good 15% would be okay. I would say that's an okay thing to do. So I say if you've got 15%, maybe even 20% in the blue chip, 65% ETFs, you've got yourself a really good portfolio that's solid, and you're gonna see some growth on it. Now, this last year notwithstanding, last year has been a little bit up and down, and it's a little bit sketchy with all the things going on with Ukraine and now with Israel. These things do affect the market. So you will see some stagnation sometime in the market with regards to that. Also, interest rates are up. The price of housing hasn't come down like a lot of analysts said it would, with the interest rates rising. So it's kind of got this whole thing going on. Inflation's still pretty high. Even though inflation did come a little bit closer to what the Bank of Canada wanted, it's still kind of having that effect on the market. So with the last 25%, really quickly, I think a good idea to put 15%, have some fun, buy some individual stocks. See a stock, find a company of a product that you really like, investigate it, see if it's something you want to invest in, check out what the management system is there, see what the leadership structure is all about, and say if this is you have a feeling for if it's a good bet. And the last little bit, honestly, I kind of believe in crypto. I missed the wave with crypto. I didn't become a crypto millionaire because I didn't understand it. But now that I do, and some people are actually, some car dealerships are actually starting to accept cryptocurrency as payment, I'm starting to think, you know what, this may be the way to go. So I do put about 10% of my portfolio. I mean, in my, see, my portfolio is broken up even more because I have real estate holdings as well. But in that 10%, I kind of throw the cryptocurrency in there, and I let it sit there. It's not doing much. I'm not doing it to kind of think that I'm going to become a millionaire overnight with crypto, but I like having a little bit of crypto in my folder. So that's kind of where I'm at. So basically, that's it with regards to cryptocurrency investing, ETFs, individual stocks, blue chip stocks. It's kind of where I'm at in that case. So as you're trying to build that fund to be able to get that down payment to buy some real estate, this is what I would do. It protects your money while it's there, and it helps set you up for retirement as well. So if you have any questions about investing from this perspective, I know it's just a quick little 10-minute video, drop some comments down, and I'll try and get back to you and answer them if that's something you're looking for. There's a lot to it. Today, I mean, even today, I'm still learning stuff. I'm always trying to learn and become a better investor and a better caretaker of my money. Thanks so much for listening. Thanks so much for watching. Make sure you subscribe if you haven't. Hit the thumbs up if you like what you're seeing. And of course, as always, the big is share the word. Share it out there so we can help people understand that a life of abundance is available just for the asking. All you gotta do is educate yourself, be focused, live frugally, save, invest, and thanks so much. God bless.